Friends, welcome to another video on profit in equities. In this video, we'll be talking about a small cap which is a very strong candidate for accumulation in the long term and has all the traits to be a future multi-bagger. Please watch this video to know more. Now the company in question is Stylam Industries Limited, which is available at Rs 625.00 and the face value for it is 10. The symbol for it is STYLAMINT. Now Punjab based laminates manufacturer Stylam Industries has been growing at a healthy clip. The company is expanding capacity and should start reaping the benefits of scale. The market is moving towards organized players and this should augur well for Stylam. The recent decline in crude prices should further support margins. At 17 times its FY20 estimated earnings, the stock is trading at deep discount to other listed plywoods and laminate manufacturers and looks ripe for accumulation from a long-term perspective. Now looking at the one-year chart, the company has not really done much and in fact is closing the year below what it started it. The company is a small cap and the market capitalization here is 510.39 crores. The EPS of 31.86 translates into a very cheap price to earnings ratio of 19.62 when compared with the industry PE of 29.99. The price to book ratio of 3.50 is also not wildly expensive. One slightly concerning factor is the debt to equity, which is at 0.8549, whereas the return in equity is also decent at 0.1761. The company did not pay out any dividends and the promoter holding is just above average at 52.71%. Now friends, this is not our own research. This was done by a financial news channel and we will be providing a link to the article in the description section. Please go through that article to build more conviction around your investment decision. Thanks for watching, and if you have not yet subscribed to the channel, please consider doing so.